What's up, everybody? Good morning, good afternoon. Welcome back to a Tuesday stream, which is the first stream of the week. We had Labor Day yesterday. Welcome to the show. If this is your first time, I can guarantee you it's not going to be your last time. My name's Kellam, the director here at BitLab Academy. We're not only a YouTube stream, we also have an entire online platform to help educate and provide all the tools and strategies and community, not only here on the YouTubes, not only here on video, but all the course content is video, but we also have a massive BitLab premium Discord, as well as indicators, as well as, so much going on. So definitely get involved with that. All the links are, where is it? All down here, bitlabacademy.com. But I just want to break down everything for us every day here on YouTube. We try to bridge that gap from beginner to pro, give people an understanding what's going on in the market and what to be looking for. So whether you're a beginner, whether you're a pro, we've got the alpha for you. We've got it broken down in a digestible way so you know what to look for and when, so that you can stack the probabilities in your favor. If you haven't yet, hit that like button, hit that subscribe button, ding the bell. We're going to be diving right into it today. We're going to be talking about what's going on with Bitcoin. Could another drop, a final drop, be one of the best things that we could be hoping for those massive returns that, let's be honest, every one of us wants? That's what we're chasing. We don't want to think we're chasing something. We don't want to think we're greedy, but let's be honest. We're in this market, not other markets, because we see the possibility, not the guarantee, but the possibility of outsized returns on that investment. That's why we're here. So how do we capitalize on getting that outsized return on investment without trading our capital away? That's unfortunately what most people do. If you watched the interview that I did on Saturday, which was released, the full length was released here on BitLab Academy, is with Didi Taihutu from the Bitcoin family. We also had a clip of it, a 10-minute clip that we released on BitBoy Crypto. If you watch that, throw a one in chat, because he brought up a really excellent point. And it's very important for me to acknowledge this to everybody here, because we have, and we're obviously going to be growing BitLab Academy, not just being charts and trading and indicators and trading strategies and fundamentals of trade. There's so much more in the blockchain ecosystem that we're going to be covering in courses, everything from coding, smart contracts to mining, all these different factors. But so many people get in and they want to know how to trade so they can make the most out of their capital. The truth is, 90% of the people that start trading lose 90% of their capital in 90 days or less. So how do we prevent that from happening? How do we make you all, every one of you here on BitLab Academy, here in BitLab Academy, if you're members there, how do we make sure that you can be trading up your capital, not trading out of your capital? It's all about being patient, one, but two, making sure you are looking at the bigger picture, not just looking myopically at a 5-minute chart and trading every time you see a green candle or a red candle, but stacking the probabilities in your favor, letting the trade setups come to you. Don't trace trade setups. What's the word I'm looking for? Don't go chase. That's what I'm looking for. Don't chase trade setups. We want to make sure that we're looking not only at, say it's Bitcoin, say it's AVAX, say it's Cardano, say it's Ethereum. It doesn't matter what the asset is. What are the corresponding assets that we can look at to give us leading signals? And then within the asset itself, what are the signals that we can look at to drive our narrative while still having risk management, to make sure that we're taking setups that are stacking the probabilities in our favor and helping us have strategies that help us have boundaries and barriers for each individual person, and they're going to be different, to keep your bad actions at bay. Meaning, if you're somebody that trades on greed, how do you have strategies in place that you don't take the greed and the FOMO trade? How do you have strategies in place that you don't take the fear trade and capitulate? That's what this is all about. And I just want to remind everybody of that. There's a lot of people here, majority of people, not majority, there's a good percentage of people here that have been watching from day one when we started this channel, about the beginning of February into January. But there's new people all the time, and even people that have been watching since then. We all need to remind ourselves on a daily basis, what is my strategy? What is my why? Why are you in this market? What are you trying to accomplish? And what is the reason for that? If you don't understand those things, then it's very easy it's very easy to have this market take advantage of you. And in reality, the market doesn't even take advantage of you. You take advantage of yourself by not having the right strategies in place and learning from your mistakes when you do make them and being able to get back on path. The goal of life isn't to never fall off the path, whether it's happiness, whether it's spirituality, whether it's, relationships. The goal is how fast can you acknowledge when you've gotten off the path, and what's your mechanism? What's your process to accepting those mistakes, forgiving yourself, and getting back on track as soon as possible and getting back into strategy. That's what this is all about. Trading, investing is actually it's such an interesting lens onto who you are as a person. And we don't want to typically draw that comparison. But if you're making a bunch of poor decisions in trading because of greed or FOMO, if you really look at the broader picture of your life, I would guess, and maybe this isn't true for everybody, but I would guess it's a pretty good lens onto how you make decisions in general. So do we want to grow our capital? Yes. But we also want to grow our happiness. We also want to grow the foundation of the love in our lives, how we communicate with people, if and when we choose to communicate truth, and how we do that. Or are we scared to because we might lose something or lose someone? All this ties together. So let's go ahead and dive into it. Again, my name's Kellam. And if this is your first time, again, I guarantee it's not going to be your last time, because this community is all about positive encouragement, education, tools, skills, tips, tricks, strategies, so that you can dominate this market. Again, hit that like button, hit that subscribe button, ding that bell. We got 121 people in the room, 69 likes. Do we want to just leave it there? Let's drive it up. Everybody hit that like button. Let's go ahead and dive into the markets. We're going to be talking a little bit about Bitcoin right off the start. And we're going to be going through a bunch of different news stories talking about what's going on in the market to helps give us context, deeper context as to what the price action is doing and forecasting where it could go. So right now we're looking at the daily chart, but we want to understand what's going on and the pressures surrounding the market so that we can look ahead to what the sentiment may be broadly, so that we can trade on other people's sentiment, understanding where the majority of the market thinks it's going to go, and we could take advantage of that. And that's what this market is about. Because if you're not taking advantage of the market, then somebody's taking advantage of you. And that's just the name of the game. So looking here at Bitcoin, I did, somebody mentioned in chat on the pre-stream, Crypto Faces morning stream, he's talking about, potentially a pretty bearish fall. And, I've talked about this similarly in different contexts, but this structure right here, I like the way Crypto Face mentioned, this kind of looks like a crashing wave. It's another way of how I've said this is a rounding top. This is rolling over. We've had smaller and smaller and smaller momentum pushes to the upside, resulting in somewhat of a double top here. Excuse me, somewhat of a double top here. And we're testing this low right here, over here. We haven't yet broken it. However, what we can see here, move this rounding top and move this to the inside here. What does this look like? It looks like a wave. Looks like a wave crashing down. Can you really hypothetically stop a wave from crashing? No. I mean, you could if there's a wall there, but in this case, what the wall would be having all the ETFs approved, in the next week or two, which I don't see. It could happen, but I don't see it happen. It's more likely, much more likely, it's going to be happening sometime at earliest, very end of the year, probably something more like somewhere January to March. So what we've had, especially right here, this is a BlackRock push-up. And then the most recent push-up right here is the Grayscale push-up. And I've talked about this almost feels like ad nauseum right now, but we have to continue to remind ourselves, these markets don't just move because they move. There's something fundamentally that changes, or there's a massive sort of massive sentiment engagement thing that with the sentiment engagement, which is the BlackRock spot ETF, which is the hope, it reignites that positive sentiment about something huge that could affect Bitcoin, but it hasn't yet happened. So people, you get the huge influx of capital. People realize it's not going anywhere. You lose steam. Once you've lost steam, there's no new fundamental change. Price action lost. And where is it lost? It's lost right at a known level. What's the known level? It's this point to this point right here, projected outward. We bounced here, and then we have 1, 2, 3 major points. Once we lost this level, the bottom fell out of the market. Now we get another sentiment push here with Grayscale winning the SEC lawsuit. But all that lawsuit said was the rejections of the SEC for the Grayscale spot ETF needs to be reviewed, not that it needs to be reversed. So you get the sentiment push and sell off again. So if we're seeing a massive sentiment push, consolidation, a little bit of a sell off, and then the bottom falling out of the market, then we get large sentiment spike, but no fundamental change. Sell off. What is it currently that's going to drive price up? Well, we're going to be coming back to this. We're going to be looking at a lot more TA here in a few minutes, but we've got to go through a couple things here. So let's go through. We have some news stories that we need to cover, and these are all fundamental and technical news stories about what's going on within the market that I want to talk about. Before we dive into that, I just want to point out here, looking right here at the dollar index, what do we see? What do we see on the dollar index? And again, I said this time and time again, Kelly, we want to talk about Bitcoin. I want to know when I'm going to make a lot of money in the market. Well, if you're not willing to do the work, you don't deserve the money. That's just a fact. If you're not willing to do the work, somebody else is willing to do the work, they're going to be positioned better. Why? Because they have an edge. What is an edge? Looking to various different data sets that aren't specifically attached to your asset, or even within your asset, looking at data sets other people aren't looking at, so you can get a little broader view about what's going on and take a position in the market that's based on some factors that most people aren't seeing, or a combination of those signals. In this case, the dollar index, as I've talked about time and time again on this channel, the dollar index is great. It's a great metric to just get a broad view of what the risk narrative is in the investing landscape. Now, what do we see right here? Look at this push up right here. What I want you to notice, if we zoom in on this, this has broken past this previous high. Now, why does this matter? Because this risk narrative right here, this is 2022. Market's falling. And if we turn on, let's turn on, where's it at? Boom. Let's turn on BTC, USD. Go to Bitstamp. Now, this was falling right here. This is right when we had the FTX collapse. This FTX collapse. What I want you to notice is there's not an exact correlation between the dollar index and Bitcoin. However, part of the reason is because there's a number of different factors within each asset class that may suppress the sentiment or suppress the price action behavior based on other factors. So in this case, we had the sell-off right here while the dollar was falling. But if we look at why this correlation wouldn't be dollar down, Bitcoin up, well, think about it. Right here, the dollar index is falling. We have the FTX bottom falling out right here when FTX, basically got crushed with all the realizations of all the bad actions that they're involved in, all the illegal activities. So in this instance, we do see the dollar falling and Bitcoin falling. However, as this is falling, we see the price action stabilizing right here, even getting a little bit of a push up, sell off, but then ultimately resulting in this large jump in price action. If we also come over to the Bitcoin, I hope I'm logged in. Okay, hold on one second. I got logged in. I had to reset my computer right before we went live. Almost had a catastrophe there. If we remember at that same spot on price action, I'm coming back to it in 1 second. If we remember at that same spot on price action, looking at the global liquidity, the dollar index was falling, but look at this large bullish divergence of the global liquidity on that accumulation phase right here following the FTX collapse. Now, where were we at? Right here. Now we get that large move up, and what I want you to notice is, trying to get a, Again, right here, dollar index is going up. We can see right here. And Bitcoin's struggling. It kind of pushes up, sells off, pushes up again, sells off. And then it's when the dollar index reverses back to the downside, we're starting to get a major move up. This is also perfectly in line with where the, this is very in line with where the, is this, yeah, this is March. This is a banking collapse. So we're seeing the dollar go down while Bitcoin is also performing well against the bank collapse and a weakening dollar. Now, again, we have the dollar index coming up, Bitcoin's coming down. So when we exit out of Bitcoin, we look at this, we see the dollar index is going up despite all this other economic data we're seeing, despite all, all these factors. We're seeing the dollar index going up, which is suggesting some pressure on risk markets. So we need to pay attention to this. We had a downtrend, which a lot of people were hoping this was going to be something with a, basically a breakdown and collapse down to 85 or, at least down to 95, maybe below. But that's not what happened. We're seeing the dollar actually perform quite well and came back and tested this level right here, which was, rejection, rejection, rejection. We broke out, rode it, pushed up, came down, tested it, and confirmed the breakout. When do we confirm this breakout? And this is for any asset. When you break a known level, come back, test it, and then the price action breaks this previous high from this breakout right here. So we've broken past that. So this is saying that there's some pressure on the risk markets. So now I want to go into some of the news stories that we're going to be talking about and show some consideration. Now, I'm still very hopeful for Bitcoin. Ultimately, I do think Bitcoin is going to be going up, but there are some pressures that we need to be concerned with as to when that may be. So let's go through this right here. I had to reset my computer, so I hope all this is, here we go. I had all these highlights. I hope they're still here. Terrible September ahead for Bitcoin. I know a lot of people have been covering this, but let's talk about this a little bit and just understand why this matters. Traders should note these 5 points before jumping in, okay? Bitcoin price is squeezing hard after remaining under narrow consolidation throughout August. It was believed that September 23 might be diverse, woefully. This is a funny word. Oh, woefully, only woefully if you're not having a strategy that's allowing you to be in the market when it's healthy and out of the market, or if you're in, it's maybe in short positions. The price started this month's trade on a bearish note, squashing the possibilities of a fresh bullish reversal. Moreover, the current trade setup indicates that the price may undergo extremely dreadful days until the end of September. So let's talk about that. In such cases, market participants need to consider the following points before carrying out any trade. September tends to be negative. As the price begins the month on a bearish note, historically the price has witnessed single-digit drawdowns in September. And if you let me know in chat if you did watch that video AJ did on BitBoy crypto over the weekend, which talked about people get myopically focused, centrally focused on one number, and they don't realize there's so much more at play. If you could see, for instance, a drop down in price on Bitcoin. Historically, average maybe, I think it's somewhere around 7% or something like that. But that doesn't mean that the price action only moved 7% in September historically. You could have a 20% push up followed by, a massive, push 20% drop and then another 13% drop. So you're past that equilibrium to come back 4 or 5% to end at a minus 7% while having, a 34% spread in how much price action moved over that month, both positive and negative, the end result only resulting in a 7% loss. So even though there's historically been a trend of, that single digit, 5 to 7, 8% loss in September's, it doesn't mean there hasn't been a lot of movement in that month, in that price action on that month. So my point with this is, even if we get a bit of a push up in September, there's still a high chance that it could come down and drop even harder. And similarly, it could drop dramatically. It could drop, let's say, 25%. And in that 25% loss, a drop down in price, there could be a rebound before the end of the month that results in only a minus, let's say 5 to 8% loss at the end of the month. So don't get focused on what the end of month number averages have been. Be prepared for movement beyond that number. That's just something that everybody needs to pay attention. And everybody, shout out to Karen Swagger Harris. She says she's late. We're going to restart the show. I'm just joking. But shout out to everybody who's here. Shout out to Alexandra G and all the mods and Alex Green, everybody, Brad Guidell, everybody that's here helping on a daily basis. I appreciate you. All the mods and everybody that's here. I really do appreciate you. If you haven't yet, hit that like button. Hit that subscribe button, ding the bell. Coming back to what I'm talking about here. Bitcoin price retraces an average of 7% to 8% in September's. In the case of double-digit retracement, which happened in 2019 and 2014 with 13% and 19%, then the bear markets may go deep. The current bear market can be compared, and I think this is funny because this all depends on the time frame you're looking at. Are we in a bull? Are we in a bear? Some people, like on Saturday with Didi, the Bitcoin family, the interview guy we had, suggests that we are in a bull market. We're just in a corrective portion of this bull market right now. Other people, if you're looking at a little bit larger macro, would argue that we are in a bear market. And this is one of those things that is just a nonsensical thing to argue because they're both probably right. Just depends on what time frame you're looking at to distinguish whether or not you're in a bull or a bear market. Because remember, we've talked about this a lot early on in the stream, months ago. You could be looking at this on the 3-day and say, well, here's a bull market and we're having a bear market and this is not yet broken any key levels. So this is just a relief rally within this bear market. But if you're looking, on the 12-hour and you're looking like this, it's like, well, this has reversed and we have these higher highs, higher lows, higher high, higher low, higher high, barely, but we still have not yet broken this low. So we're technically in a bull market on this time frame, right? So don't get trapped in the idea of whether or not it's a bullish or bearish market, because it all depends on what the time horizon is you're looking at in the market cycle, because you're having multiple cycles and all this. In reality, if you're looking here on the 4-hour, remember, this is a bull market. This is a bull market distribution. This is a bear market. So again, it all depends on what time frame you're looking at. But understanding where we're at in the market cycle for Bitcoin as it relates to the halving, and also liquidity flows and global interest rates and all these things. If we come over here, actually, by the way, if you haven't yet, make sure you're giving me a follow right here at Kelly Kellam. You can also see my information right there. That's the only way that it's spelled. But if we come up here to TXMC, he argues that the Bitcoin cycle is not governed by the halving. It's just a relatively coincidental timing of when Bitcoin was released and all these other things that play into what happens within Bitcoin. It's right here. So this is a correct halving take, in my honest opinion. Just look at interest rate oscillations, annualized equity returns, and manufacturing PMIs next to Bitcoin cycles, and it becomes plain as day. The location of the halving is a wildly convenient coincidence. So my response to this is that he's not wrong, but I also don't think he's right. And I also don't think people that think the halving is the thing that drives the Bitcoin market is right either. I think it's honestly, just like everything within any asset class globally, it's going to take a number of different factors that are going to drive the cycle. Now, was Satoshi Nakamoto absolutely brilliant and just, looking at the global liquidity cycles and, and just deciding when to release this? Well, I would argue no, because if you think about it, if you really think about it, one of the things that Bitcoin was born out of, and this, not that Bitcoin was born only out of the housing crisis in 2008, because this is something that was, sort of in the minds and in the hearts and the spirits of, those cypherpunks for, more than a decade plus before Bitcoin came to fruition and was released. But the housing crisis definitely put a huge amount of pressure on, encouragement in developing out that idea and getting it out there. And it happened to coincide also with the technology available and the appetite. Let's think about it. The appetite for something like this is really what really drove the genesis, because the global housing crisis, the housing crisis that really started or blew up here in the US with the subprime mortgages and all this kind of stuff and the Big Short and everything everybody knows about. That economic pressure that it put on households and families globally also created the foundation, the bed for which those thoughts and the desires for something different from the traditional system. Because now we have internet, we have social media. People are starting to get wiser because they find out about not just what the narrative focus is of the news and the media and the Fed and the government. Now people can speak freely and go after data and randomly happenstance find different stuff that they never would have known about. So the appetite's there. Seeds of knowledge have been planted over the last 20 years of social media. The awareness is growing that there's an opportunity for another system, something that maybe not fully replace, because I think it's still going to be 50 years or more before something truly replaces fiat and government systems for monetary. There's so much that's tied into all this, but there's an opportunity for something to run in parallel that also gives you, 1 foot in another field. And Bitcoin is engineered in such a way it's had no issues. It's only provided deeper trust because it's trustless, right? We don't need to trust somebody to approve transactions and make sure that they're not doing something illegal. It's like, no, the entire system is built on the fact that the whole network has to agree on this, and it's programmatically done. It's not done by a human making these decisions. So the appetite was there, the knowledge, the seeds were already there, and now, it's coming to fruition. And it happened right at the time when the global housing, the housing crisis happened, which happened to also line up with right about where the cycles of liquidity were. So that's what we need to be aware of. There's always larger things at play. So coming back over here to the story right here. So chances for a massive crash rally are unlikely, as the historical Bitcoin chart indicates that the price has never recorded consecutive double-digit bearish months. It has to be noted that August has already registered a 13.5% loss, and hence such a steep plunge may not be followed this month. So we may or may not, is what they're saying. So we're gonna have to dive into this, because these points start becoming a little arbitrary, right? The Bitcoin price may retrace between 7 and 13%, which appears to be reasonable, dragging the price between $22,500 and $24,000. Collectively, the Bitcoin price is displaying perseverance in times when the markets appear to have been choked. So let's dive into this a little bit further. So Bitcoin ownership explodes. So we're going to get some balance of news. I'm not just a bear at all. I'm looking at a broad range of things, as we all need to do, and make sure that we have Crypto Crank. Do I use Coinbase One? I do. And not only do I use it, I recommend it. Why? Because I had $30,000 stolen out of my Coinbase account from a very, very sophisticated hacking, not even attempt. I mean, it was successful. They got 30,000 out of my account because I had Coinbase One. I had every dollar returned to me. It took me about 2 or 3 weeks, and they returned it at the Bitcoin value. It was all altcoins, but they had converted it all to Bitcoin and then transferred the Bitcoin out of my account. So they returned it to me at the Bitcoin value that was in there when they took it, and the prices had dropped. So I ended up ahead when it happened. So I definitely recommend it. So good question there, and I definitely wanted to answer that. Everybody hit that like button, hit that subscribe button. We got 160 people in the room, 107 likes. So we got some bearish signals out there, but we also have fundamental growth. So one of the things that I want to talk about is, even if price is going down, even if price does move down, I don't look at this bearishly at all. I look at this as building the best opportunity that we've ever had in Bitcoin, because we do have history on our side. We do have the data that suggests how powerful Bitcoin network is. And we see institutions starting to come in. We see us talk, Bitcoin and crypto and blockchain talked about on the floors of basically every major government in the world has talked about it at the G20. We're seeing it, on a daily basis with news articles from, senators and congressmen and the president and regulation and SEC. This is one of the hottest topics of the time right now, Bitcoin and crypto, and what to do with it, how to regulate it, how to get involved with it, not get involved with it. Now is the time. If you are here, you are so far ahead. Even if you feel like, golly, I don't even have one full Bitcoin yet. If you have 0.1 Bitcoin or even 0.01 Bitcoin, you are so far ahead of the curve. So be patient. Now looky here. Looky here. I just spoke like I was a grandfather talking to a child. Looky here, folks. Bitcoin ownership explodes. More holders in Spain than Spain's citizens. What does this mean? On-chain data reveals that the number of Bitcoin holders now exceeds 48.5 million, overtaking the entire population of Spain. This count includes a variety of investors from small scale to whales, providing a snapshot of Bitcoin's ever-increasing adoption. So what this is saying is, think about how many billions of people are in the world. It's somewhere like 8 billion or something like that. 48.5 million own Bitcoin of some amount. Could be 0.001, could be, all different sizes. And think about how many people are in the world. 48 million may feel like a lot, but in the scale of the entire globe, the population, we have not even gotten started. This is I want the price to drop. So every single one of you and everybody that's out there that's not in, and here's a fun fact. The opportunity, whether this is a low right here at 26, 20, 25, 7, or we drop back down to 22,000, the truth is the majority of people that aren't in yet don't want to buy an asset when it's falling because it's like, oh, it's going to crash, right? The people that are going to have the best opportunity in terms of how much growth they're going to see in this next bull cycle are going to be the ones that look at all the data we talk about here on a daily basis and take advantage of this asset being on sale if it were to drop. But the truth is, the majority of people don't understand that. They're going to start buying after we're back above $70,000. More people are going to even buy after we're above 100. Even more people are going to buy when we're over 150. Don't be that person. Because in reality, some of you are going to be selling to them when prices get up there, preparing to take advantage of the next bear market cycle and taking profits from buying at these low prices. So, I mean, it's just incredible. The current tally of Bitcoin holders surpasses not only Spain, but also other countries like Argentina, Algeria, and Iraq. In a U.S. context, the number of Bitcoin holders outnumbers the population of any American state, including California, which is with its estimated 39 million residents. Point being here, on the one hand, we've got a huge amount of holders globally, which fundamentally, in some sort of risk metric, you can look at this like there is an freaking incredible foundation for Bitcoin going into this next bull cycle, and a little bit of I don't want to say it doesn't remove, but there's a bit of a protection of this just being completely quashed, because this is a massive community of people globally, massive, but it doesn't mean that it doesn't mean that we've peaked by any means in terms of the where adoption is going. So know that. Now, remember, we're seesawing here between very bullish and fundamental things, and also some other concerns and questions we have. Crypto funds. This goes back to the protectionary mechanisms right here. Crypto funds see large outflows as investors lose confidence in the market. So what are we talking about here? Crypto funds record large outflows. Between the 3rd and the last week of August, crypto funds saw a cumulative outflow of $179 million, with Bitcoin funds leading with $149 million outflow. Within the same period, investors persisted and liquidated their short positions across exchanges, adding an extra $4 million to the outflows. For altcoin funds, Ethereum saw outflows of $17 million, while XRP and Litecoin recorded inflows of 0.5 million and 0.44 million as investors. Now, I want you all to notice something. This, of course, Bitcoin has a much larger outflow. This is not because everybody's more scared of Bitcoin. Understand the data here. Understand how it relates into the bigger picture, into the puzzle pieces, and why things are set up and doing the things they're doing. Bitcoin institutionally is a much safer investment. When institutions are looking at crypto, they're not, large in part, I mean, the massive majority, they're not looking at altcoins and stuff that have a $1 billion market cap, a $20 billion market. They're looking at Bitcoin. So Bitcoin has a huge amount of money in crypto funds, and traditional investment type of people, they're also not looking at these ridiculous, much smaller market cap altcoins and higher risk plays. So there's a lot more money and funds and setup for these Bitcoin crypto funds, which is why you're seeing larger outflows. It's not because people are more scared of Bitcoin. So understand that first, okay? Ethereum's outflow is a 7. We read all that. Now, the above data suggests that it will take longer than early anticipated to get a bullish catalyst for the markets. And the longer the ETF saga draws on, the less pronounced the effect could be on actual market prices. So I don't necessarily agree with this. I think I think as the saga draws on, and again, I think a lot of people are aware that this is going into a lot of people are aware that this is going into early next year. In fact, I think price action, maybe getting a little bit of a pump, but it's, testing down to that 22 to 24 level. 24 it feels like kind of like a given, but testing down to that 22 level, maybe even a wick down below that, maybe even closing that CME gap down closer to the $20,000 level would be a big deal. We got super chat in the house. JR says, when do you see the altcoin market top being this cycle? What do you mean, JR? Let me know in chat. Do you mean pre-halving, or do you think in the next bull cycle, when is the top going to be? Or are you asking, have you already seen it? Yeah, you're going to let me know a little clarity on that. It's going to have to do with capital flow, because capital flow tends to seesaw between Bitcoin and the alt market, where alt markets will start moving and Bitcoin will start moving and outpace the alt market for a bit. Though a known level will be broken, and then we'll push higher. Price action will come back a bit as capital is flowing into altcoin markets, and we'll see altcoin markets just absolutely skyrocket, and then they'll plateau for a bit, and then people will take profits and capital flow into Bitcoin. It kind of seesaws ultimately until we get the confirmed top on Bitcoin. It has historically seen the altcoin market top follow the Bitcoin market top, because capital then is flowing out of Bitcoin after that Bitcoin market top into altcoins. So you get this alt season sort of post Bitcoin top and then crash down. So if that were going to be the case, the top for Bitcoin would likely be, for both Bitcoin and altcoins, based on the historical cycles of the crypto market, would likely be sometime in the late third or fourth quarter of 2025. So that's something to note. Now we're going to get little mini cycles in between, just like we have previous cycles. So we need to pay attention to that and look at the broad range of data to get to make the smart decisions. Now, signs of a market bottom. While the crypto market records capital outflows, stablecoins are seeing increased adoption. This is interesting here. Bitfinex noted that since 2022, stablecoin transactions on layer 1 blockchains have been over $6.8 trillion. So here's a point for you. Anybody, when you're out in public, I don't want you to argue with, please don't argue with anybody about Bitcoin, blockchain, crypto. Do not have an argument. You only push them away. Say, if Bitcoin and the crypto market, just say this, just think about this. If Bitcoin and crypto has no value, consider that the stable coins that function, as liquidity going in and out of different assets, when people are, hedging their positions, getting into the market, getting out of the market, but they're staying in the crypto marketplace. If there's been 6.8, would a market that has $6.8 trillion traded in it since 2022, is that something that has no value? And that's up to everybody else to decide, but it's a good thing to really consider. So here we go. Meanwhile, consistent exchange BTC outflows of Bitcoin, this makes no sense. Exchange BTC outflows of Bitcoin, presumably self-custody cold wallet signal that long-term holders are still bullish and would rather hold instead of trading their assets. So there's two different narratives going on here. There's bearishness because of what's going on in the market. There's outflows, but the Bitcoin that's being held, there's outflows from funds. That's one aspect. That's on the somewhat more traditionally traded, funds, the GBTC and other things like that. But we see here, the long-term holders are still bullish and would rather hold instead of trading their assets. So there's an incredible fundamental strength that's building in the narrative, in the maturity of the market, as despite price action falling, we're seeing record long-term holders. We're breaking metrics here. While there's still bearish pressures on the market, the strength of the underlying network and the underlying composition of holders broadly across the Bitcoin marketplace is showing that maturity is holding and only growing. This is an asset to hold, and now is not the time to sell. So that is something to be known, and we need to keep an eye on that. Now, moving across here, I got a couple more things here, and we're going to be getting into some TA here in a couple minutes. Everybody hit that like button, hit that subscribe button. Whales accumulate Bitcoin, but it's not BlackRock. It's important to note this, and I love this sort of on-chain metric. What you're seeing here, if you really look at this, this is coins, cohorts of Bitcoin, basically. So you have less than 1, 1 to 10, 10 to 100, 100 to 1,000, 1,000 to 10,000, and greater than 10,000. And we're seeing a heat map here. And you can see from small holders to very, very large holders, the heat map of what's going on within the market. Okay, so trend accumulation score by cohort since source Twitter X or whatever. So what we see here is, seems like peak Bitcoin distribution is behind us, as we can see a slight uptick in accumulation. Now, what that means is when it's very blue, this is accumulation. See this all blue across all different types of holders, very small holders to very large holders. A lot of accumulation. What was this? This was post FTX collapse. This was the accumulation before the push up. Okay. So everybody was accumulating into this, accumulating here. And then what happens is, see right here at this top, before this comes down, all this red. Similarly, we come down right here. This is all red on this sell down. We got, except for the wallets over 10,000, we're still accumulating down into this. But what we see right here is it's not bright red, which means nobody's accumulating. We had a bit of red. We had sell pressure from wallets over 10,000. And then this color is lightening. It's getting bright. It's getting from the dark red into this midsection, showing a little bit of accumulations happening broadly across. It's not deep accumulation like this, but we're seeing the behaviors change. Seems like, okay, seems like peak distribution is behind us, as we can see a slight uptick in the accumulation. This is the most aggressive accumulation since June or July for whales, which have over 10,000. Now we see this, the lightest color. What is it? It's right here on the large wallets. So I want to swim with the whales. I don't want to swim with the fish. The whales tend to make the smartest decision and tend to actually help shape the direction of when they start buying at those very fearful point when retail's scared, and they're selling long before retail catches a whiff of it. But you can catch a whiff of it if you're paying attention to this on-chain data. And even if you don't have any on-chain data account, whether you're using lookintobitcoin.com, looknode.com, or paying for things like Glassnode, you can also watch shows like this or go into different news aggregators and find stories and learn about this stuff and see that there are data sets and signals broken down to give you an indication of what's going on. Now, right here, from a high time frame valuation perspective, Bitcoin, this is from Will Clemente. Bitcoin's position is intricate. While it's not overheated relative to historical values, there's a tangible risk of retesting the lows akin to Q1 of 2020. So what does this mean? Right here, you see these two bands right here? These two little bands? This was a global economic shutdown. We retested that. It was scary as hell for everybody, but for those that were prepared, had dry powder on the side, and were willing to look at the data and say, man, this sell-off, this capitulation is an incredible opportunity. What did it do? It gave you a near market cycle bottom opportunity again to take advantage of these types of returns of the full bull market. So we dropped below these bands here. We pushed up, and could we have that test back down? So this is that record I was talking about a second ago. A staggering 94.6% of all Bitcoin remained stationary in the last 30 days. We set a record high at August end, and this might soon be surpassed. Historically, bear markets conclude when supply dries up. A mere spark of demand could ignite the next explosive bull market. Significance of the 26K range, as it marks the daily, weekly, and monthly open high volume node and weekly VWAP. Therefore, for bulls, it's the line of action if we break above it, and for bears, it's the fortress to defend. This is also one of the reasons when we're looking at the Bitcoin price on here, we're seeing this weekly VWAPs right there, 25, basically just under 25.9. If we come on here on the daily, come on, there we go. So it's right about 25.9. And this is not going to, we've already had the fake out above this once. And we look at this, we tested right back into it, rejection. The bears are defending this zone. Bulls tried to break it here, brought back under it. Bulls really tried to break it here, brought back under it. Rejecting, this is not showing signs of super strength yet. So where were we at? Now, the simultaneously decline in both buy side and sell side volumes is a cause for concern, suggesting a market that's currently directionless. And barring, this is interesting. Remember, I kept talking about the sentiment that was getting us up, but we didn't have any fundamental shift to carry that movement further and higher. The declining sell side volume coupled with a lackluster buyer volume, so there's not more sell side volume. There's an equal amount of there's an equal amount in loss of conviction from buyers as well. So the volume's going down on both sides right now. And if there's not anything to drive the bullish narrative higher, then even with the lack of sellers' conviction, there's a higher chance of price action going down than pushing up here because there's nothing to support, to fuel that buy side pressure if it does happen. And that's why if it does happen very quickly, you need to be aware that it very well could be a trap. So see, the declining sell side volume coupled with the lackluster buyer volume is concerning. With the volume breakout, neither from sellers nor buyers, the market lacks momentum. So Rect Capital indicates that a breach of below the 26,000 mark, and this is kind of where we're at. So regionally, we're still in that zone. Things are not an exact dollar basis when you're looking at levels on the chart. On the weekly chart, so this means at the end of this week, having a weekly close, especially lower than where we're at now, that's kind of basically showing that we do have a potential to hit down to that $22,000 level, which is basically this next low. Now, I just want to, we're not going to get into the Ethereum stuff. It's essentially saying the same stuff. Price vulnerability for big decline. There's a lot of stuff that's being same thing with buy and sell ratios, and large amounts moved onto exchange for Ethereum. But I just want to get into this last 10, 12 minutes. I want to do some TA with everybody. So if you're down with seeing some TA, throw a 1 in chat. We need to look at some things here, and I will be doing TA on the BitBoy Crypto Show later. So come in there, bring some positivity, bring some lab coats. Let's look at this. So on the daily, what do we have? On this, I mean, we have this rounding top we talked about. It's rolling over. We're testing. We've tried to test these lows. We're still holding above it, but there is this sort of bear flag, fake out. There's confusion in this market and no conviction. There's no conviction with things rolling over. And the bulls are also losing their conviction. So we need to look at this. Let's get down to the 4 hour. And this is, sell, loss of level. an attempt that lost the level. So in some ways we can create a trend line from this right here to this right there to, let's see if this is, yeah, so got rejection right there. Then that makes sense. We had that projected out. Now let's go ahead and delete this line. So price action lost the level. And now look at this. Not only did we lose the level, when the price came back down and has found a consolidation below the level at which this consolidation was. So this is concerning. Now I talked about it last week, this move to the upside. Are we going to get some sort of similar move to the downside? If this were to be the case, where would that put us? Look at that. Isn't that amazing? That measured move right here, just measuring this move, if we were to test that liquidity to the downside, that would have us testing down here to $24,000. That was one of the reasons why before I said 24,000 feels like it's kind of programmed in. It feels like it based on the way the price action has moved. And this target down here, right here, is essentially that sort of line in the sand for, maintaining some sort of, bullish narrative for the next couple months. If we do come down here and test this, maybe this will be a spring that then we launch out of. But as it stands right now, this is looking more likely that if this does test down to here, this will likely test into the low 23,000s, into upper 22,000s, which essentially would be where this giant order block is saying that there's a liquidity magnet down here in this zone. So we got to pay attention to this. We see on the 4-hour, we're seeing mixed signals here. Bullish, bullish, neutral, neutral, bullish, bullish. This is the dashboard for the BitLab Trend Fuel. And then on the BitLab volume, all of these part of the BitLab trading stack. Here on the BitLab volume, we're being held under the point of control right here. Not only the point of control, not only the point of control, but we're also, look now, right now, we are testing this weekly VWAP. We're testing it. We're trying to break out of this. We have the trend signal line that we're pushing above, testing this weekly VWAP, but we have this point of control directly above us. So don't take some huge leverage long trade just because we break this weekly VWAP. They are flushing people out left and right now. They're going to try and commit people to go long, more likely than not, to only bring this back down, to catch that liquidity. So if this does push up, look, we're pushing right in this order block right here, this highlighted red block that's part of the BitLab trading stack right here. We're pushing into it. So even if we break this weekly VWAP, we have this whole area directly above us up to about 25,970 that we potentially could very quickly be rejected down from. And if we're not, we have this, not only this massive order block above us right here, we also have this descending level of resistance here. So if this does push up, it seems like the path it would take, because it's probably not going to do that. I don't see a big news story coming out, but even if it were, we still have that descending. It's probably going to do something like this. And if it were to break this level and have some big move up, we have this whole area to contend with of this previous high, this right here in this region, this descending level that I just marked out right here, and this order block. So we have a lot of work to do above. Don't just go long because we break this weekly VWAP right here. This to me is more likely that even if we push up, we'll likely catch something here and start its move to the downside. That's what I'm leaning towards on Bitcoin. If we get down to a 30-minute and just see what's going on here. Okay, look at this. It's making that attempt. But the RSI is coming up to a level. I mean, we can see this level right across here, that if it cannot break, it's coming up to a level that it's been rejected 1, 2, 3, 4, 5 times. So we got a lot of work to do here. And look at this. This tried. You see this on the 30-minute? It tried to break that weekly VWAP. Bear's eating this up. We got 5 minutes left. If this does happen, then this again is showing us rounding top, suggesting down. This is the level we're kind of watching to break, 25,660, if it does come down. So let's look a little bit at Ethereum. Look at that. We're on the 30-minute, but let's keep it here. Ethereum pushed up, where tested into this order block, magnet up into it, and it's kind of getting rejected at the moment. Let's see how this plays out. But look at this momentum. This momentum right here is rolling over. Stochastics angle down, RSI coming into a level that is being rejected from. Let's see if it gets rejected again. We had a lot of buying pressure right here. We see all the volume here, and it couldn't do it. It could not break through that zone. So they're trying to capture your liquidity. They're trying to capture people that don't have trading strategy right here, right now. Now, if we come here to the 4 hour, let's look at this. So this did not play out. This was if this was a bull flag, and this is why you always need to look at upside and downside. So we marked this, but we also know that, and I talked about this, this was likely coming back down here if this broke to the downside. And that's exactly what happened. And that's why you always map out both a bullish and your bullish and your bearish narrative. So same thing on Ethereum, came down below, it's consolidating below the level it was before. So interestingly, if we zoom in on this, Ethereum, this tested up into the lows, kind of a lot of these lows of this range. Option J, see this? All these, this sort of low, tested into that, got rejected. Yeah, this is the trap. This is a trap attempt here. So somebody got trapped here, only to capitulate down here. Now we do have this order block below us, but if I do think we're likely come down to the lower 1600s and potentially, losing that, I think we're going to be going down, quite a, testing down here, 1549, which is, the low sort of here, 1540, 1550 sort of zone, and potentially coming down if we lose this level down into the 1400s, let's go a little lower, about right there, 1465. But remember what's coming. All the stuff with the institutions, all this stuff with what's going on with the cut in the new supply for Bitcoin, the new supply, the cut in inflation. What is that? The halving. All this is in the cards. We know where systematically Bitcoin goes over time. If we look back over here at, come over here to the halving progress, where are we at on the Bitcoin halving? We are, 84% of the way there. Right? This is a halving. This is a price action. This is a halving. This is a price action. This is a halving. This is a price action. Is it going to happen again? I'd say it's a pretty high likelihood. Could it be a little delayed if we get a lot of economic pressure? Absolutely. But it's still going to take effect at some point between 2024 and 2025, having having those large gains. So trade smart and don't worry if the price gets suppressed right now because of fear and, if there's institutional pressure trying to bring prices lower. Don't be mad at it. Take advantage of it. That's what I wanted to tell you. And I just want to say, if you haven't yet, make sure you head over to bitlabacademy.com. Check us out there. We got all kind of different courses, breaking everything down from trading fundamental strategies, Bitcoin and blockchain. This right here is all free. And then we got self-custody, psychology of trading, on-chain data, a whole course with 20 different lessons in there, candles, candle patterns, indicators, not just our indicators, all kind of indicators, trading strategies. And then of course, if you can sign up for the BitLab Pro here, you can sign up for the All Access. All Access gets you all access to all our courses and the premium Discord. This is where you sign up for free. You can also sign up for the Pro that gives you the indicators, the courses, and the premium Discord. And of course, if you want just the indicators, you come right here to indicators, go down to BitLab Trading Stack, sign up. And for everything that we have out there, I extended that coupon code because we had the Labor Day. We've had a lot of different things happening within our family, and I love you guys here in the community. And I just want to make sure you guys can take advantage of this while we still got it. Give Me 30 gives you 30% off your first month. Remember, the BitLab Pro also gets you everything bundled together for about 30% off every month. You can get another extra 30% off your first month using Give Me 30. Just add it to the cart, go into, proceed to billing. And then after you proceed to billing, this is where you put in that code. But I love you guys. I appreciate you guys. I hope you all have a wonderful day. I'm going to be heading over to BitLab Academy. I'm going to be heading over to Bit More Crypto to be doing some TA. Let's bring the positive vibes there. Again, I really appreciate you all. And I hope you all have an absolutely wonderful day, and I will see you there. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in to bitlabacademy.com. Hit that like button, sucker.